Do you want to save $100,000 for the first time, but are unsure where to begin? Go no further than Charlie Munger, a renowned investor and Warren Buffett's business partner. Munger is renowned for his direct, down-to-earth approach to personal finance and investment. He has imparted his knowledge on how to amass wealth and secure financial freedom. In this video, we'll look at Charlie Munger's suggestion on how to save your first $100,000, including how to stay out of debt, put money into reputable businesses, be patient, stay away from speculation, and more. Charlie Munger's views can assist you in laying a strong foundation for your financial future, whether you are a novice investor or an experienced one. Let's get started with Charlie Munger's suggestion on how to save your first $100,000. 1. Spend less than you earn. Munger advises economizing and avoiding pointless expenditures. He advises concentrating on living frugally in order to save as much money as you can. Sure, the advice of Charlie Munger to live within your means is a cornerstone of personal finance. It just means being aware of your expenses and spending less than you make. You can save more money by living within your means, which you can use to invest or accomplish other financial objectives. You might need to alter your way of life to live within your means, such as budgeting. Make a spending and income tracking budget. Find strategies to save money where you can, such as cutting back or eating out. Cancel subscriptions you don't use, or find ways to lower your utility bills. Preventing lifestyle inflation. It's simple to start spending more when your income rises on things you don't actually need. This phenomenon is referred to as a lifestyle inflation, and it will swiftly deplete your money. Instead, make an effort to maintain the same level of spending despite rising income. Keep an eye on your spending. Before making a purchase, consider if you actually need it or if it's just something you want. Avoid making impulsive purchases and spend time researching your purchases to get the greatest deal. You can have more money to invest in reputable businesses or other assets that can help you amass long-term wealth by living within your means. Also, by keeping an eye on your spending, you can form wise financial practices that will benefit you all of your life. 2. Munger recommends avoiding all debt, including credit card debt and auto loans. He thinks that debt should always be avoided because it can be a significant barrier to financial independence. Certainly, the rationale behind Charlie Munger's advice to stay out of debt is that it might lead to stress over money and prevent you becoming financially independent. Debt entails interest and fee payments, which over time can build up and make it challenging to save and invest money. These are a few methods for avoiding debt. Establishing a budget will enable you to live within your means and prevent overspending. Budget for necessities like housing, food, and utilities, and place a cap on discretionary spending on items you don't actually need. Spend less on large purchases by saving up over time rather than borrowing money or financing them. This will enable you to not only avoid debt, but also to bargain for a lower price on the things you wish to purchase. Create an emergency fund. In the event of an unforeseen expense, such as a medical bill or auto repair, having an emergency fund can help you avoid taking on debt. Avoid credit card debt. Due to the frequently high interest rates associated with credit card debt, it can be very harmful. To prevent paying interest, make sure to pay off the entire balance on your credit card each month. Be cautious while taking out student loans. If you must borrow money to pay for college, make sure you do your homework and comprehend the terms of the loan. Think about state or community colleges, which are frequently less expensive than private universities. You may lessen your financial stress and improve your capacity to invest and save by staying out of debt. You could accomplish financial independence and long-term wealth accumulation with this. Subscribe to the channel for more content like this. 3. Munger, a supporter of value investing, advises investing in high-quality companies that have a significant competitive advantage. He advises concentrating on businesses with a solid management team and a track record of success. Value investing, which entails seeking out undervalued businesses with sound fundamentals and holding them for the long term. Munger advises concentrating on high-quality businesses with a significant competitive edge, or moat, to succeed. A business with a moat enjoys a long-lasting advantage over its rivals, such as a strong brand, proprietary knowledge, or network effects. Here are some strategies for investing in top-notch businesses. Do your homework. Before investing in a company, do your homework and look into its finances, management, industry, development prospects. Look for businesses that have a history of success and an enduring competitive advantage. Don't put all your eggs in one basket though. Think about diversification. To spread out your risk, think about diversifying your portfolio over several industries, regions, and asset classes. Keep calm. Long-term thinking and patience are necessary for value investing. Focus on the market long-term potential of the firm you're investing in rather than being influenced by short-term market vitality. Avoid paying too much. Even high-quality businesses can be overrated, so be sure you buy at a fair price. As a sign of value, look for companies with a low price-to-earning ratio, or PE ratio, or a high dividend yield. Keep an eye on your investments. Observe your portfolio and make any necessary adjustments. Consider selling your shares if a company's fundamentally deteriorates or if its competitive edge erodes. You may gain from the long-term growth and profitability of high-quality businesses if you invest in them and they have a significant competitive advantage. But there are always hazards associated with investing. So before you put your money into anything, it is crucial to do your own research and understand those risks. 4. Munger emphasizes the significance of having patience when it comes to investing. He advises staying away from get-rich-quick schemes and putting your attention on long-term investments that have the potential to grow in value over time. According to Charlie Munger, one of the crucial traits of a good investor is patience. Avoiding get-rich-quick schemes and concentrating on long-term investments that have the potential to compound over time are his two main pieces of advice for investors. Instead of trying to time the market or make quick money, this means being prepared to hang on onto your investments for years or even decades. Here are some suggestions for investing patience. Consider the long term. Munger advises concentrating on investments that could grow in value over time. This entails making long-term investments in high-quality businesses that have a distinct competitive advantage. Avoid trying to time the market because it is difficult to do so and might result in bad investment choices. Munger suggests putting more emphasis on long-term fundamentals of the company you invest in, rather than trying to forecast short-term market changes. Avoid being distracted by noise. It might be challenging to remain focused on your long-term investing goals when the financial news media is frequently filled with noise and distractions. Be focused on your long-term investment strategy rather than getting distracted by the newest headline or stock market chart. Investing is a gradual process, so it's crucial to have patience with your returns. Be focused on the potential long-term growth of your investments rather than letting short-term market vitality deter you. When it comes to investing, being patient will help you avoid making snap judgment and maintain attention on your long-term investment objectives. Keep in mind that investing is a marathon, not a sprint, and the modest profits over the long run can build up to considerable riches. 5. Avoid gambling on the stock market or other risky assets, according to Munger. He advised putting more emphasis on long-term, high-quality investments than trying to turn a profit right now. Charlie Munger cautions against stock market speculation and other dangerous trades. Buying or selling stock with the goal of making a rapid profit based on momentary market changes rather than long-term fundamentals is referred to as speculation. These are some tips for avoiding investment speculative behavior. Consider the long-term fundamentals of the company you're investing in, rather than trying to time the market or generate a fast profit. Seek out top-notch businesses with a proven track record of success and significant competitive advantage. Avoid following trends. Refrain from following the newest fad of stock market trends. Instead, pay attention to the businesses that are expected to operate well in the long run and have sustainable business strategies and a significant competitive advantage. Avoid investing in something you don't fully grasp. Do not invest in complicated financial items or instruments that you do not completely comprehend. Stay with investments with a basic business plan that you can understand. Invest in what you stand for. Choose businesses and sectors that reflect your values and the things you believe in. This can assist you in maintaining your attention on the long-term potential of your investments rather than passing market fad. Charlie Munger's advice on how to set aside your first $100,000 is both wise and applicable. You can lay a strong foundation for your financial future by staying out of debt, making investments in reputable businesses, exercising patience, and avoiding speculation. Keep in mind that accumulating wealth requires patience, perseverance, and discipline. But the benefits can be great. Charlie Munger's ideas can assist you in achieving your financial objectives and leading the life you desire, regardless of where you are in your financial path. So pay attention to what he says, keep learning, and keep your eyes on the prize. Long-term financial success. We appreciate your time, and we'll see you in the next video.